Consider yourself at a fork in the road where your financial choices and the price of Tesla's shares are opposite each other. Is it something you should purchase? Do you think you should wait? We will, however, be simplifying the Tesla stock problem for you in this exciting episode. We'll dissect the crucial elements, forward-thinking tactics, and alluring opportunities that might influence your investing path. We hope that by the time this movie ends, we will have assisted you in making a decision. Please remember to use the like and subscribe buttons first. Let's get this video started, and welcome to Tesla Stock News. Tesla is without a doubt one of the most talked about and watched stocks on the stock market. Even though Tesla witnessed a severe downturn last year that resulted in a more than halving of its share price, its rapid climb and huge future potential have at times driven its share price to dizzying heights. Many investors are still wondering if this is a purchase that is too costly. As Tesla expands into other markets, a number of analysts have been closely monitoring the company's prospects outside of the electric vehicle industry. The purpose of these evaluations is to give investors a clear picture of the company's future, which should make it easier for them to make stock purchases. Prior to the previous year's stock market collapse, Tesla's shares had already surged much beyond its operational performance. Investors jumped at the chance to join the front-runner in a market with enormous growth potential. The electric car market had rapid expansion, and years of sustained worldwide growth are anticipated. Tesla was able to hold on to its leadership in the face of competition from traditional automakers as well as EV startups. As a result, even though Tesla's enormous valuation, which peaked at $1.2 trillion in late 2021, did somewhat decline, the company has clearly proven that it can manage a very successful enterprise. Tesla has demonstrated that it is worthy of the original enthusiasm from investors. The corporation earned over $1 billion in free cash flow in the second quarter alone, despite spending over $2 billion on capital projects. Even still, the stock remains expensive when compared to the present state of the company's fundamentals. It has a recent market capitalization of $865 billion and a high price-to-earnings ratio of around 80. This implies that investors are expecting income from other sources in addition to continuing to grow its already lucrative EV and emerging energy sectors. Wedbush's Dan Ives recently did an analysis exploring the possibilities of Tesla's supercharger network. Ives estimates that by 2030, the number of competitors who reach deals with Tesla to use its charging network may bring in between $10 billion and $20 billion in revenue annually. Separately, renowned Morgan Stanley automotive analyst Adam Jonas revised his company's Tesla estimates in light of the company's artificial intelligence technologies. According to Jonas' study, which was provided by Barron's, Tesla has created a cutting-edge supercomputing architecture in its effort to achieve autonomy. This design pushes the bounds of bespoke silicon and might give Tesla an advantage over competitors in a market with a total addressable value of $10 trillion. As a result, Jonas increased his company's price estimate for the shares from $250 to $400. Investors should treat these estimates with a fair dosage of skepticism, despite the fact that they are undoubtedly optimistic. Dojo, the AI computing technology from Tesla, is a good example. During a conference call for the second quarter, Elon Musk disclosed that the business intends to spend more than $1 billion over the course of the upcoming year in order to gather data for Dojo's ongoing expansion and its efforts to train supercomputers. Whether you invest in Tesla stock at these current prices mostly depends on your perspective on analyst estimates, Elon Musk's autonomous car vision, and the possibility of expanding Tesla's software services. Though the development of AI technology indicates that self-driving cars may become a reality in the future, Musk has expressed optimism about the day when Tesla vehicles would be utilized for ride-sharing robotaxis. Purchasing the stock at current levels makes sense if you think this will happen and take into account the value of Tesla's charging plug becoming the industry standard in North America. But if you'd rather take a less wild guess, you can base your choice on current knowledge. Tesla continues to outperform its competition and has a strong core business. This year, the corporation plans to boost EV production at a rate of almost 50% annually. Even in the fiercely competitive Chinese market, Tesla's August car deliveries increased by 9.3%. Despite this, the stock's valuation has increased dramatically in light of its possible success in a number of fields outside of the EV industry. Therefore, rather of depending exclusively on Tesla's EV business performance, your decision to invest in the firm now should be affected by your belief in its forthcoming undertakings in the coming years. The benefit of diversification is the case in favor of owning a basket of these equities. It comprises Spang and Li Auto, two possible Chinese Teslas, as well as Tesla. Globally, the market for electric vehicles is growing from 14% to 30%, providing significant growth potential for investors in the appropriate companies. Plans by Tesla to construct a factory in Germany bigger than that of VW and BMW indicate that there is a high demand for and continuous possibility for auto sales. Doubt might set in given the recent volatility of Tesla's shares. Stocks with great performance potential are frequently sought after by investors, particularly while they are still profitable. So the issue is now a good time to purchase Tesla stock? The investor has the final say in the matter. Nevertheless, it seems that Tesla is still cheap, based on a review of its potential and stock price. Purchasing Tesla stock today could result in large financial gains. The company's growth potential is undervalued by the present stock price of Tesla, and the tale is only getting started. Upon analyzing the results statement and call, it became clear that the EV market was prioritizing volume and accessibility over profit margins and other criteria such as tax credits and incentives. Tesla intends to strategically position itself while rivals catch up by increasing its capacity to create more cheap automobiles. Tesla keeps coming up with new products to satisfy customer demand, like the Cybertruck. Tesla is well positioned thanks to its dominance in the worldwide battery EV market, robust sales growth, and outstanding profits per share performance in the second quarter. Analyst price projections for Tesla seem likely to be met, if not exceeded. According to our study, Tesla might be a sensible investment at these current prices. Investing in Tesla at this time hinges on how you see the company's potential, how confident you are in its approach, and how convinced you are of its growth story. Due to its tenacity and inventiveness, Tesla is a desirable option for investors hoping to profit from the growth of electric automobiles in the future. Cathie Wood, the CEO of ARK Invest, for instance, has set an optimistic price objective of $2,700 for Tesla shares by 2027, demonstrating her belief in the company's potential for future growth. Similar to this, Wall Street analysts predicted that Tesla will generate $84.0 billion in revenue overall in 2022 and $12.46 in adjusted earnings per share, indicating that the business would perform financially above expectations. It is thought that Tesla made a wise decision by adding more reasonably priced models to its roster in order to appeal to a wider range of consumers. By introducing a range of vehicle models, including tiny cars and pickup trucks, Tesla is able to serve a variety of market niches. Cathie Wood has attracted a lot of attention with her prediction about Tesla's prospective robotaxi company. She sees this project contributing significantly to Tesla's earnings and enterprise value in the future. Elon Musk has seen setbacks in his ambitious timeframe for completely autonomous driving. Yet Tesla's autopilot technology is still advancing. With millions of autopilot-equipped cars on the road, Tesla gathers important data for its algorithms that will eventually be used to drive itself. Tesla is well positioned to profit from the developing autonomous driving sector because to its ongoing development. It is exciting to think about a time when Tesla cars could be able to operate as self-driving taxis, bringing in money for their owners. Renowned entrepreneur Kevin O'Leary recognizes Tesla's distinct position as a data company in addition to an automaker. Regarding autonomous driving, Tesla has an advantage over its competitors thanks to its autopilot and fully self-driving capabilities. For Tesla to get towards complete self-driving capabilities, it must make investments in R&D, data collection, and ongoing software updates. Another aspect of Tesla's competitive edge is brought to light by Kevin O'Leary's perspective on the company as a data company. Tesla cars are outfitted with cutting-edge sensors and cameras that gather information on traffic patterns, driving habits, and other topics continuously. The machine learning models that drive autonomous driving characteristics are trained using this data, which is extremely valuable. Furthermore, the vehicle performance can be continuously improved and enhanced thanks to Tesla's over-the-air software updates. Tesla is positioned as a leader in artificial intelligence, AI, and self-driving technology as its fleet and data advantage expand together. Improved collision avoidance systems and pedestrian recognition are two safety measures that significantly increase the safety of Tesla vehicles and increase their value. Furthermore, Tesla is now known for its creativity and out-of-the-box thinking. From its innovative vehicle features to its distinctive factory designs, the business has continuously upended the automotive market. Tesla differs from other automakers in that it is able to push limits and question accepted conventions. Beyond just electric vehicles, its emphasis on sustainability, renewable energy, and energy storage technologies shows a dedication to tackling global issues. Investors appreciate Tesla's inventiveness and anticipate further groundbreaking developments in the energy and transportation industries. Unlike other manufacturers, Tesla is able to increase the manufacturing of electric automobiles while still remaining profitable. Investor confidence is bolstered by Elon Musk's innovative initiatives and Tesla's track record of innovation, despite concerns regarding diminishing margins as a result of price reductions. In the first half of 2023, Tesla's market share in the U.S. electric car market was close to 60%, demonstrating its supremacy in the industry. Tesla's market share may be threatened by established automakers and recent competitors, but the company's steady profitability and positive cash flows remain astounding. Tesla continues to dominate the electric vehicle industry despite growing competition, especially in the U.S. In 2023's first half, Tesla held about 60% of the U.S. market for electric vehicles. In the EV market, both major manufacturers and recent arrivals have made progress, but Tesla has an advantage because to its well-known brand, robust charging network, and loyal customer base. Tesla's operational efficiency is demonstrated by its capacity to create electric automobiles on a large scale while maintaining profitability. The narrative of Tesla's expansion is far from ended. Its grandiose goals involve increasing manufacturing capacity, setting up gigafactories across the globe, and launching cutting-edge automotive types including the much-awaited $25,000 compact car and the Cybertruck. With the opening of new plants and increased production, Tesla is probably going to find creative ways to manage profits as the market changes. In conclusion, rather than being influenced by transient swings, Tesla's stock performance is determined by its long-term market potential. Though there are a few things to be concerned about, Tesla's future seems bright. Please leave a comment below with your opinions and your Tesla valuation. The story of Tesla's path is one of constant innovation, market leadership, and limitless potential. The global leader in electric vehicles is still attracting investors with its visionary leadership, data advantage, and relentless dedication to pushing the boundaries of transportation. That concludes this video, gentlemen. Tesla is at the forefront of an industry that is changing, from its dominance in the electric vehicle market to its entry into autonomous driving and its position as a data powerhouse. It is undeniable that Tesla's journey is far from done, regardless of your belief in the company's data-driven superiority or your bullishness about robotaxis. What do you think about Tesla's potential as a data firm and how it could influence autonomous vehicles in the future? Do you think there is still significant room for increase in Tesla's stock price, considering its leadership in the electric vehicle market and its ambitious future plans? Please share your ideas and observations in the